It's always fascinating when you see a market facing, well, real headwinds, and then somehow a single player manages to not just stay afloat, but actually, thrive.
Hmm.
That's the puzzle that really jumped out at me from the latest figures on the Nigerian car market. We're looking at the first quarter of 2025 here.
Absolutely. And the data we've got is from Focus to Move. It really paints a compelling picture. You see both the struggles and some quite unexpected bright spots in this, well, really important African automotive landscape.
Exactly. So for this deep dive, our aim is to really get under the hood of what's happening right now in Nigeria's car market.
Right.
We're digging into this focus to move analysis, and our mission really is to figure out what's driving the trends we're seeing and what the whole economic context tells us about this region. It's pretty dynamic.
It is. It's a market with, significant long-term potential. So understanding these current shifts is definitely key. Let's get into the details.
Right. So the big headline, I suppose, is that the Nigerian car market has seen a pretty significant contraction. A 22.3% drop in Q1 2025 compared to the same time last year. I mean, that's a substantial slowdown.
It is, yeah. And if you drill down a bit further, the electric vehicle segment, the EV market, is actually seeing an even sharper downturn. Sales there fell by 25.9%.
Wow, okay. That's interesting, especially with the global push towards EVs everywhere else, seemingly. So what are the kind of underlying factors here? What's contributing to this overall drop, and why are EVs getting hit even harder in Nigeria right now?
Well, you really have to look at the broader economic climate. It's critical. Focus to Move points to, okay, a projected modest GDP growth, maybe 3.3% for 2025.
Okay, modest, yeah.
But, when you stack that against the very high inflation rate, it was 34.8% at the end of 2024, and then the significant depreciation of the Naira, like 42.1%, it becomes pretty clear that people's actual purchasing power has been, well, seriously eroded.
Right. So even if there's a little bit of growth on paper, the reality for, everyday Nigerians is that things are just much, much more expensive. Makes big buys like cars way harder to justify.
Exactly. And then you layer on the high interest rates. The central bank pushed them up to 27.5%, trying to get inflation under control.
Right.
But that makes borrowing money, whether it's, consumers looking for car loans or businesses needing capital, it makes it incredibly costly. And that just dampens demand across the board, including cars.
And it's not just those big macro numbers, is it? The report mentions the rising cost of living generally, and also increased transport costs because they removed fuel subsidies.
Yeah.
That's also squeezing budgets.
Precisely, yeah. But when your essential spending food, getting around goes up that much, there's just less money left over for, discretionary things like a new car.
Okay, so the overall market's shrinking. Let's maybe unpack the performance of the specific brands. Are there any, notable shifts in who's actually selling what in this tougher climate?
Yes, definitely. Even with the downturn, Toyota has actually managed to hold on to its #1 spot. Their sales did decrease, though, by about 13.7%.
Still leading despite a drop. Okay.
Yeah, which probably reflects, their strong brand recognition, reliability, reputation in Nigeria. It's well established.
And maybe surprisingly, Innocent, that's a Nigerian manufacturer, right?
Yep.
That's moved up to second place, even though their sales also dropped about 10.5%.
Yeah, that's quite something, isn't it? Improving rank while the whole market's falling.
It really is. What does that suggest?
Well, it might suggest that local production offers some, perhaps, resilience, maybe against currency swings and import costs.
Oh, okay.
Perhaps their pricing or maybe just their access within the local market gives them a bit of an edge right now. But on the flip side, Hyundai took a pretty big hit.
Oh, yeah?
They fell to third place, and their sales declined substantially, 22.4%.
Wow, that's a big slide for them.
Yeah.
But the real standout, the one we mentioned at the start, is MG.
Absolutely.
They've jumped 3 spots up to fourth place, and they're the only top brand showing positive growth. And it's not just positive, it's remarkable, up 74.5%.
It's fascinating, and the report specifically calls out the MG5 model. It says that's the only model in the entire ranking that actually saw positive performance.
Just the one model driving that growth.
Seems like it. It really makes you wonder, doesn't it? Is this particular car just hitting a sweet spot? Maybe price, features, perhaps even fuel efficiency? Something that's really resonating with Nigerian buyers in this specific economic climate.
Yeah.
It suggests a very targeted success story, within the wider market struggles.
It really does. While almost everyone else is treading water or sinking, MG found, well, something that clicks. Okay, let's circle back to the electric vehicle market then. as we said, it's facing even bigger challenges.
Yes, that 25.9% decrease in sales means the EV market share is still, well, stubbornly below 1%. It really underlines the huge hurdles for widespread EV adoption in Nigeria.
And we touched on infrastructure. The report mentioned some efforts, like Sterling Bank has this Corvée Mobility initiative,
Hmm.
but it seems pretty clear the charging network just isn't there yet to support a big shift to electric.
That's a critical bottleneck, definitely. Range anxiety, the hassle of charging compared to just pulling into a petrol station. These are major deterrents for potential buyers.
Sure.
And on top of that, there's the price. The upfront cost of EVs in Nigeria, it just puts them out of reach for most people, especially with all the economic pressures we've talked about.
Right. And even if the government has, stated goals about clean mobility and transitioning,
Yeah, the pledges are there.
it sounds like the practical problems, the infrastructure and the cost, are really slowing things down on the ground.
Exactly. Policy ambitions, they need to be backed up by concrete investment and actual strategies to fix these fundamental limitations.
And who is actually selling the few EVs that are moving?
Well, right now, Volkswagen pretty much dominates that tiny segment. Then you have Kia in second and BAIC in third. It's a very, very concentrated market at this early stage.
Okay, so we're looking at a difficult present, but the Focus 2 move data also gives us some useful history, some context. Let's maybe step back to, say, 2014.
Okay, yeah. So 2014 was important because Nigeria launched the Automotive Industry Development Plan, the NAIDP.
Right.
It was a pretty significant policy push, actually modeled on Brazil's approach. And the main goal was to basically compel automakers towards local production, make it more attractive to build cars in Nigeria.
And did it work? I remember hearing about licenses being issued.
Yeah, there was some initial buzz. Nearly 30 licenses were issued to potential manufacturers in the next couple of years, but then the market just collapsed.
Collapsed. How badly?
Massively. It plummeted by 68.5%. Sales dropped to just 10,446 units in 2017.
Wow. Why?
Mostly triggered by the crash in global oil prices back then, which weakened demand significantly. It just shows how vulnerable the Nigerian economy, and especially its auto sector, is to those kinds of external shocks.
Okay, but things picked up a bit after that low point. I think 2018 saw a recovery.
Correct. In 2018, sales bounced back strongly. They increased by 68.7%, up to about 17,625 units. And that growth did encourage some manufacturers to actually set up some small-scale local assembly plants. So it suggested the NAIDP was having maybe some initial positive effect, even if it was from a really low base.
But that recovery didn't last long, did it? There was another drop in 2019.
Indeed. Short-lived. In 2019, sales fell again by 20.5%. That brought the market right back down, almost the lowest point it had seen in a decade. It really highlights the instability, the difficulty in getting, sustained growth going.
And then, of course, 2020 hit everyone with the pandemic.
Yeah.
That must have made things even worse.
Oh, absolutely. The lockdowns, another slump in oil prices tied to the pandemic, it led to a huge 34.7% decrease in sales in 2020. Just a terrible combination of global health crisis and renewed economic pain.
Okay. But since then, since 2021, the report suggests things were slowly improving, a period of growth.
Yeah, slow but steady is a good way to put it. There's a 25.9% increase in 2021, then 3 straight years of rising sales after that. It reached 13,320 units in 2023, which was actually the best performance in 4 years, up 23.5%. And even in 2024, there was another increase, 15.6%. So yes, there was some positive momentum building before this dip we're seeing now in early 2025.
Right. Shows potential, maybe.
Exactly. It demonstrates there is some underlying potential, maybe some resilience there. But, and this is crucial, you have to remember that even with those increases, the overall sales numbers are still really quite low for a country with Nigeria's massive population.
Yeah, that's the thing. Which brings us back to where we started, really early 2025. The Focus 2 Move analysis also just briefly mentions factors that might be holding back more investment in the Nigerian auto industry.
It does. It points to the persistent economic instability and also a fair bit of uncertainty around government policies. Those are pretty significant disincentives for investors.
Makes sense.
Yeah, when the economic outlook is shaky and the rules of the game might change, businesses are naturally going to be more cautious about making big, long-term commitments to things like building factories or expanding infrastructure.
And all of this is happening against a backdrop of, broader, real economic challenges in Nigeria.
Mm-hmm.
Things like structural constraints, rising poverty levels, It all seems connected.
It absolutely is. The car market isn't like in a vacuum, right? Its performance is deeply tied to the overall health and stability of the Nigerian economy and fundamentally the financial well-being of its people.
Okay, so let's try and pull this all together then.
Yeah.
If we were to summarize, what are the main takeaways looking at the Nigerian car market in this first quarter of 2025?
Okay. I'd say first, there's been a significant downturn overall, sales down over 22%. That's the headline.
Right.
Second, MG's remarkable growth against that trend is a huge story. They've clearly tapped into something specific that's working right now.
The MG5 factor.
Exactly. Third, the EV market is still really struggling. Big hurdles remain, mainly infrastructure and cost, which are really hindering adoption. Market share is still tiny. And finally, looking back, the historical data just screams volatility. The market's incredibly sensitive to big economic events and also to government policy shifts, like the NAIDP.
Okay, so putting it all together.
Yeah.
Considering Nigeria's huge population and all these policy attempts over the years to kickstart local production and grow the market, what fundamental shifts do you think might actually be necessary to unlock the true potential there?
Yeah.
To make it sustainable, especially now with all the new automotive technologies coming through, it just feels like there's this massive disconnect between the potential and the current reality.